2018 EBIX Cash Studio.
Good morning and welcome to Bazaar Morning Call from the CNBC TV18 EBIX Cash Studio. I am Anuj Singhal and with me in studio both Prashant and Sonia. So a bit of an indication that at least in Mumbai things are back to normal or getting back to normal. Fingers crossed, and we hope that remains the case. Sonia, Prashant, good morning. And you know, it's an important week because truncated week with monthly expiry and can be a lot of fun and games, of course. Last full week as well ahead of union budget. So let's see. The domestic cues are strong with good numbers, but global cues extremely weak. So it'll be interesting to see how the market reacts to the global cues on one side and the strong numbers from ICICI and Reliance on the other side. For starters, of course, the SGX Nifty is indicating that we'll have a gap down. Sonia, good to have you in studio.
Hi, thank you, Anuj. Hi, Prashant. Morning. I mean, so much to track this week, right? You started by saying that there are global cues which are weak. There's a union budget next Tuesday. So the big run up to that. But I'm tracking these earnings and, you know, cracker numbers coming through from ICICI Bank, very strong numbers coming in from Reliance Industries, of course, barring that small chemicals piece which didn't do well. But retail has just been surging for Reliance Industries. SBI Life came in during market hours, towards the fag end of trade on Friday. Very, very good numbers over there. In fact, CLSA put out a note where they said that SBI Life had its best-in-class performance this time, and there are more margin levers. So, Anuj, the question on my mind is, although the market could open in the red, will these good numbers from some of these heavyweights sort of salvage the bulls a bit?
Sonia, the issue is, when we have this kind of a setup, it reminds me, even the good numbers remind me of the thing that, if your house is on fire and you find out that there is a 70% sale going on in a mall, would you go to the mall or save your house, right? I mean, look, jokes apart, there's a large FI selling which is on right now. In fact, this month, FIs have sold $2 billion and we are just, still 1 week to go. So that's a lot of selling, and that's something which our market perhaps has not been able to absorb. Now, SGX Nifty is indicating a gap down. Today, I'll just focus on the price action. The Nifty on Friday defended the 50-day moving average of 17,505. In fact, me and Prashant were doing closing bell. We saw that 150 point last hour pullback as well. Now, on days like today, the SGX Nifty low is sacrosanct. What's that low? 17,435. That's also important because 17,450, like we discussed on Friday, is also the 50% retracement zone. So if the market has to bounce, this really is the zone. If you're a risk reward trader, 17,450 to 17,500 is where perhaps we're likely to open, given the SGX Nifty is not the best shorting zone. Very simple. The market's texture is sell on rally, so and cover on collapse. So if you short it, perhaps you cover and then you wait for a rally to perhaps short again. That's how markets have worked. What's happening in the US is different, of course, and Prashant will talk more about that. The S&P 500 has broken the 200-day moving average. Now, the key is ICICI and Reliance numbers are good, but is the market in a mood to buy? And is there pre-positioning accordingly? I think that's something that will get answered. My sense is ICICI Bank directionally looks good. Today, of course, can be anyone's call. And one last point, the put-call ratio and the FI index futures data is not yet in the bottom zone. Perhaps it gets there today in the first hour, but it's not there as of now. But you know what, Prashant hosted a very nice Twitter Spaces yesterday, and Prashant, two things which stood out for me. One was that we had 3,500 people joining, so it tells you that there's a lot of pain in the market. I think you made a very I think you made an excellent point about what's happening in the US market, the profile of stocks which are falling.
Oh, yeah, absolutely. I mean, unprofitable stocks. I mean, actually, there is a basket, which I also discovered over the weekend. There's a Goldman Sachs basket of stocks of unprofitable companies. And that index, that basket basically has fallen 40% since November. So when we say NASDAQ is down 13%, 14%, I mean, actually, it's this bunch which has seen the maximum amount of pain. And I think some of that is reflective here as well. I mean, you look at companies like, just to illustrate, not to pick on any company, but Zomato, for example, right? I mean, it's gone back below the listing price, and a bunch of other companies we'll discuss as well. But just to come back to the global picture, I do think that, and I said this on Friday as well, in the US, a tactical bounce could be around the corner. Things are very oversold. I mean, in the very near term, and that's why I'm deliberately using the term tactical. And the FOMC is on Wednesday. Is there huge amount of sort of scope for the Fed to be even more hawkish given the market turmoil which, its earlier comments have ignited? I don't think so. I mean, it's not to say that they already start to say, we won't increase rates and we'll slow down taper. I'm not saying that, but markets react to incremental news flow. And is there incentive for the Fed to sound even more hawkish on Wednesday? Perhaps. I mean, logically, it would not be the case. Two ETFs which are widely tracked, widely traded, the biggest actually, one for the S&P 500 and the NASDAQ, both have got relative strength indexes of 25. I mean, that's essentially very, very oversold. If you look at put-call ratio, that also is indicating that things are maybe at one end, one extreme. And I think the lesson is not one-to-one between what happens in India and what happens in the US. But I think the lesson is essentially what's happening in the US is that high PE stocks and value stocks, I think there is a stark differentiation which is happening. So be wary of high price to earnings multiples, companies maybe with little by way of profitability, but of course with lots of scope and scale, and that's the reason why they were bid up in the first place. I think that's essentially the part of market which you want to steer clear of in an environment like this. I do think it's going to remain volatile for a while, but in the interim, I also do believe that there may be a bounce around the corner. Will we get it today? What US opens, etc. We'll see. But I think maybe it's just around the corner. Sonia.
Well, by the way, it's fabulous that you had over 3,500 people on Twitter Spaces. It just goes to show that, this medium of sort of disseminating news has changed so much.
I enjoyed it, Sonia. And it's the first time, so, I mean, I enjoyed it. The technology, I mean, I had help, I have to accept, but...
Was it from your son?
My wife. So,
the younger ones generally, come to our rescue. All right. But just wanted to track a couple of things. I mean, Prashant did point this out, but a couple of, 2-3 things which the market might track very closely. A, there was a big sell-off on the Dow. It was down almost 500 points on Friday. There was large selling by FIs in our own market as well. Almost 3,200 crores was sold on Friday. So that trend continues. And all eyes will be on the Fed meeting that takes place this week and the union budget that takes place next Tuesday. Don't have very high hopes from an equity market standpoint from the union budget. It's a very, very tight tightrope walk for the government between trying to boost growth on one hand and fiscal prudence on the other hand. So let's see. For now, the SGX Nifty is indicating that the start will be in the red. But first up, we have some opinion coming through for you. On the equities front, Rupal Agarwal of Bernstein says that the factor and sector leadership will be more mixed than what we saw in 2021, which was largely a value-driven rally, especially in Asia ex-China. We've seen a strong value rotation in the first 3 weeks of this year, and they expect this to continue, however, only in the short term. Rising US yields have been a key macro driver, which would lead to a strong value rally in China. However, in India, they expect the value rotation to be much milder as the duration risk is already priced in, and the value performance so far this year in India reflects this.
Okay, let's get you some money market views. Then B. Prasanna of ICICI Bank says that the pressure on risk assets has intensified amid expectations of faster monetary policy normalization. The CBOE VIX in the US has shot up 34% last week. Rising geopolitical tensions and attendant market volatility lend support to dollar in general. Rupee, which has benefited from debt market inflows and IPO pipeline, remains vulnerable to deteriorating global risk sentiment, higher crude prices and large FII outflows. He expects the rupee to trade in a range of 74.10 to 74.90 in the near term with a depreciation bias against the dollar.
All right, and on the bonds, V. Prasanna says pairing of positions in riskier asset classes except crude is the general theme going into the much anticipated FOMC meeting next week. From pricing in a cessation of quantitative easing to now guidance towards rate hikes and quantitative tightening, the markets are still trying to find equilibrium. On the domestic front, extra caution is warranted given upcoming budgets, with rates and the OIS expected to trade in a narrow range. He expects the 10-year benchmark to trade in a range of 6.55 to 6.65% for the week.
Okay, those are views.